Hey everybody, it's Peterenzulli. Good morning. Welcome to Stock Trading Pro. Let me move that video. Welcome to today's Stock Market Live. It's been a while. Last week I was at a mastermind convention in Orlando. Just amazing opportunity to network and start to think big. I do want to share something with you that happened at that event, and I'm going to do it in just a second. Today we're going to talk about whether or not the stock market has bottomed out, whether the stock market crash has kind of worked its way through the system, and whether or not there's new buying opportunities lining up right now. I will tell you, it is coming right off of a holiday. We had a 3-day weekend. It's Tuesday, so today's the first day of the week. Stock futures are up pretty big right now, but that's not why I'm bullish. That's not why I'm looking to be a buyer this week. I do want to make it clear, I'm talking about buying for this week. I'm not talking about the bear market being over. I'm talking about us being smart, using our tape reading skills, and finding some opportunity to get in there and be buyers this week. With all of the bearish activity that we have, it'll be a nice little pocket of opportunity. But there's one particular moment in time that's important for this week, and one price that matters for this week that's going to lead to me wanting to be bullish this week. Electric vehicle stocks caught a pretty big bid last week. We also had the solar stocks catching a really nice bid last week, an entire group of them actually having a really big percentage move last week. So we're going to do a little bit deeper dive into that. We're also going to talk about a very popular industrial stock that I'm going to be looking at this week. We got a lot to cover. Citigroup had a really big article this weekend about whether or not it's undervalued at this particular price. A few stocks that are trading less than book value right now, which is absolutely amazing. But does that mean the market crash is over? No. We're looking for opportunities. One of the big things we're going to talk about today and this week is a lot of people say you can't time the market. Timing the stock market is impossible. I completely disagree with that because we've been doing it and we do it every day. The challenge for those people who say you can't do it is they don't have a system for doing it. Obviously, our system is order flow stacking. So I really want to get into this today. Got a bunch of stuff to talk about today. It's going to be, you can tell I'm all jazzed up about trading this week. So stick around. Be back in just 1 second. Okay, so thank you so much, everybody, for joining me here today. Obviously, everything we discuss here is for educational purposes. It's my job to help you make better decisions. It's your job to make that final decision. I just want to make sure I say good morning. Hey, LJ, good morning. Thank you so much for being here. Joseph, how are you? Joseph O'Brien and Brian O'Shea. So we got our Irish friends in here today, and also Juan. Hey, Juan, good morning. Thank you so much for being here. And Don, who had a birthday last week. Don, happy birthday as well. So I just want to get right into it. We're going to go right over into the market. We're going to take a look at a couple of stories, but I want to be clear. I am looking to be a buyer this week. I'm looking to buy stocks this week, and today we're going to work through the charts and look for the best stocks to buy now heading into this week. But please, do not misquote me. I'm not saying the bear market's over. I'm not saying we're not going into a recession. I'm talking about this week. Now, the thing that we have to be careful of right now is this. The stock futures are actually up 62 points right now. You can see where we were last week, and we're continuing to grind higher. So we're actually going to have a bigger opening. Now, I want to talk about this in a way that is understood by everybody, and we make sure that we have the right language down. So that is right there. That's Friday's high. 369.26. So we're actually above that right now. So this is a part where a lot of people get the language messed up, where we talk about a higher opening versus a gap. A higher opening is not always a gap. A gap is when it opens outside of yesterday's price action, whether it's above or below yesterday's price action. That's the definition of a gap, which leads to a very different trade. So this morning, you can see that we're up 300, up to 372. Which takes us well beyond Friday's price action. As a matter of fact, it takes us beyond Thursday and Friday. So we have a gap going above 2 different days. So the challenge that we're going to have this morning is, where do we buy with this big move higher? So I want to be clear about this. We're up a really big percentage, $6.24 in the S&P 500, the SPY ETF right now. Futures, S&P futures, E-mini S&P futures are up over 60 points right now. So I am not looking to buy on the open. I am waiting for what we call that opening range within the first 15 minutes, within the first 60 minutes, depending if you're a day trader. Now, if you're a swing trader looking for some opportunities, and again, we talked about some of the energy stocks. So let's actually start out with, not energy stocks, excuse me, solar stocks and we take a look at the percentage moves that they had yesterday, this is a pretty big move. Yesterday, Friday, 170 all the way up to 187. So that's a $17 trading range on these stocks on ENPH specifically on Friday. And by the way, one of the biggest things that we've noticed inside of our Discord community, probably over the last, let's say 6 months to a year, if you happen to be an old school day trader, there used to be this clock on the wall where you trade from 9:30 to 11:30. You'd go to lunch for 2 hours, come back at 1:30, get back into a groove, and you trade the last 2 hours of the day. I remember on one of the first day trading offices that I was at, which was on Long Island, Old Country Road, right by the Roosevelt Field Mall, across the street from Bagel Boss. I don't know if anybody lives out there, but there used to be a clock on the wall with colors of when the market would reverse, like 10 after 10, you'd have a perfect reversal. That doesn't exist anymore. That was when market makers and specialists were in control of manually making the orders. Those firms are still doing the market making and the specialist activity, but it's mostly done by computers right now. Here's the thing that I want to tell you, though, which kind of plays into the gap up in the S&P 500 this morning and how I'm planning to trade it. There has been a shift in when market activity has started to trend. And I don't know if it's because bear market, but I can definitely tell you it's something we've noticed in the last 6 months to 8 months in the market, that the biggest intraday trends for day trading stocks have been happening after 10:30. And I'm not giving you the exact moment when it turns around, but even if we take a look at this chart of ENPH on Friday, you can see this move started at 11 o'clock. And if we go to other stuff like the SPY, you can see the SPY bottomed out at 11 o'clock. If we go to some of the other solar stocks, you can see right around 11 o'clock. We're also going to talk about some of the electric vehicle stocks, and specifically Chinese electric vehicle stocks. NIO actually had a really clean breakout this week and actually showing some relative strength and up again this morning. So the point that I want to make is 2 points. If you're day trading stocks right now, the old school times of day where it was the best time of day, I actually had it when I traded in New York. We had this one guy, his name was Mike. He would trade the first 2 hours of the day and he'd be done. Mike would be very frustrated right now because the activity in that first half hour to an hour of the day is a lot more hit and miss than it was prior to, let's say, the market turning back down. But if you are diligent and you have your software set up properly, if you have your watch list set up properly, you have the right stocks in your watch list at the right time of day, which lately has been the midday, we've started to see these stocks catch a bid and rally. Now we're going to talk about tape reading and reading the tape to formulate what we believe is a short-term bottom in the market and why I'm looking to be bullish today. So just to recap what I just outlined, I'm going to be a little bit more aggressive this week, but I'm not going to be initiating aggressive trades until after the first hour of the day. Now, again, if you're swing trading, you have a full-time job, you're not trading stocks full-time, that's fine. You could do the same exact thing that I'm about to talk about with end-of-day price action using today's low as your reference point for putting trades on. Okay, so I can't express this strongly enough, and this is kind of a stock trading lesson that we all need to really wrap our heads around, which is having an idea, knowing when that trading idea is still valid, and knowing when that trading idea changes. I know that sounds obvious, but raise your hand if you're stuck in positions this year with the market coming down and getting hit hard and you kind of froze because you didn't have what we call that line in the sand or the ability to do tape reading to determine it's valid versus it's no longer valid, and we either have to get out, scale back, or maybe even just get back into cash. So I want to be clear about this. I am planning to be long this week as long as we remain above, and I'm talking about the S&P 500. So if we get back into the SPY, as long as the S&P 500 on the weekly chart remains green. So you can see how much we've been working the charts. Let me actually get these guys off the screen over here. This is the kind of week that I'm looking for. So you can see we had a week of indecision, a heavy week of selling, and another heavy week of selling. So let's discuss why the last 2 weeks of selling was aggressive and why we saw follow through. Inflation, the Fed, big perfect storm of bearish news creating that stock market crash, which went down for 2 weeks solid. But let's think about what we got going on now. Earnings season is kind of working its way through. There's some earnings coming out this week. FedEx reports earnings on Thursday, I believe. But for the most part, the bad news that was anticipated is already now baked into the market. Now, are we in a longer-term recessionary period? 100%. So if we start looking into some of the news and we work our way over here, okay, big risks for the Dow Jones for the next 6 months, right? So nobody's disputing that. This is Investors Business Daily. I think we can all agree that the bigger picture of the market, we're looking for a bigger move to the downside. There's not a question about that. But what we're looking at right now is, hang on a second, got to get that dude out of there. What we're looking at right now is this. Stock futures are bouncing. Bitcoin is bouncing. So we have a lot of good stuff going on in the market right now that is something we can take advantage of today. So I actually want to walk you through something from yesterday, which is actually our Monday night coaching call. And I want to give you an idea of some of the conversations so you can take advantage of the current market activity. But I just want to give you a heads up. What we're about to do is we're going to work together scanning for ideas for this week. Now, I can't stress this strongly enough because it's one of the biggest things, probably one of the things that makes our community, our Discord community, a little bit different. I am telling you straight up, okay? What we are about to talk about are ideas. We're about to build an argument. We're about to, put everything into our I can't show you the other side of this because it has all the trades on it. But what we are about to do is come up with ideas. You need to come up with ideas. I need to come up with stock picks. We all need to come up with stock picks, right? The challenge that we all have with the market is believing that we need to be right. And I can't stress this enough. And this is probably one of the biggest mistakes, and it can be fixed like that, is believing that because you had a good breakout, because you had a bull flag, because you held support and you put that trade on, is believing that it needs to work. It has to work. It must work. As soon as you get that out of your head and you admit that the trades that we put on are probably going to work. Now, again, stacking the order flow, building that argument, reading the tape, that's what makes you a trader. When you put all those pieces together, what should happen next is what you're planning for. What should happen next is what you expect, which is why we decide to take risk, which is why we decide to put our hard-earned money on the table. Now, you might be saying, yeah, I get that. I know that. Yeah, well, let me ask you a question. Has there ever been a time where you've been trading where you moved your stop loss? It was going down. It was about to take you out. And you're like, no, I'm just going to give it another day. I'm just going to give it another dollar. Whatever. And then what was a reasonable stop loss turns into a disaster, okay? If you stop doing that, if you put a trade on saying, I'm willing to risk $500, I'm willing to risk 100, whatever, 1,000, whatever the number happens to be. We actually ran a poll on our last webinar. The average dollar amount risked was $750 per trade. That was what the number was that a lot of people put in. We actually ran a poll, right? So what we're about to talk about in a big bearish environment are opportunities to buy. If those opportunities to buy follow through, it's our job then to have the discipline to hang on to those trades as long as however we decide to trail our profits is still valid. If we put these trades on to be a buyer of stocks this week, and that does not follow through, and the big recessionary monster that's hanging over the stock market right now that has caused the stock market crash, if those sellers come back into the market, we simply get out. We simply get out, we take our losses, we take our small profits, and we move on to the next idea. Something else that was very big that we discussed on our coaching call last night is understanding profit targets for buying opportunities in a bear market versus understanding profit opportunities in a bullish market. We're in a bear market right now, which means that you need to be planning what kind of profit targets on the long side to be a buyer are realistic with all of this selling pressure. So I'm going to walk you through a couple of the things that we talked about on last night's coaching call, just to give you some ideas. We have implementation calls on Monday and Thursday night every week. I just want to show you them to give you some ideas. But I want to start out with one thing first, which is the mastermind that I went to last week. And these are some people, as a group of about 40 people, making millions and millions of dollars in their business, some of them online, some of them brick and mortar, that kind of thing. But I want to share something with you that was one of the most important things that I want to bring to the forefront, because it makes a difference. People who are massively successful take action, pay attention to the feedback, and then make adjustments. Okay. Now I'm talking about business. I'm talking about running a business, being an entrepreneur. So the first thing is massive action. Okay. Massive action based on doing research, massive action based on what the market is calling for, whatever kind of market those people happen to be in. I'm going to keep saying the same thing. Massive action. Step number 2 is you pay attention to results. Step number 3 is you adjust based on the results, and then you take action again. So what's the secret to success? Whether it's the market, whether it's the stock market, whether it's business, whether it's losing weight, doesn't make a difference. The secret to success is taking action, paying attention to results, and then making a better decision. Now, the reason so many people lose money in the stock market is because they take action and then they don't pay attention to the results. They're trying to prove themselves right. In trading, in the markets, you should not be trying to prove yourself right. You should be trying to make money. And making money, number 1, means having an edge. Number 2 is managing the downside. And if you manage the downside, you'll be around for number 3, which is learning how to make more on your winning trades, having the discipline to have holding periods that warrant holding those winning trades. So again, I just want to bring this home, and I want to start this week out on a positive note, not because I'm looking to buy stocks, because I want to inspire you to understand that people that make millions and millions of dollars, the number 1 trait that they all have is taking action, paying attention to results, and then making better decisions based on the action and those results. So tie that back to your own trading. That's what's very important. Pay attention to the feedback, pay attention to the results, and then make better decisions as soon as you get back into the market. Okay. We got somebody who's got nothing better to do than spam the comments today, so we got to get him out of the comments. All right. Anyway, so let's head on over. We're going to actually head on over to Discord. We want to pay attention to some of the ideas. Now, I want to add into the chart today volume, and we're going to go over to the daily charts. If we run our scans from yesterday, one of the top scans that I run, and this is, you can run, anybody using FinViz can do this, double normal volume. Now, you can see that there were 101 stocks that had double normal volume yesterday. So the criteria that we have are over $10, average true range over $1.50, average volume over 2 million, and double normal what it normally does. Okay. Now, why do I look at that? I got this question all the time. It's one of the first scans that I run at the end of every day. I am looking for smart money activity. I want to know, did anybody step up and super actively trade a particular stock? Now, I want to give you a heads up. On a normal day, when I run the double normal volume scan, again, I'm looking for smart money activity. I'm looking for them starting a move. I'm looking for them ending a move. A normal day with that criteria has anywhere between 10 and 15 stocks that meet that criteria. Yesterday was 101 stocks, meaning last Friday, 101 stocks. Now, why did that happen? We have tend to notice in our community that option expiration day, there's a lot of jockeying back and forth. So shares, the amount of shares traded that day increases dramatically because they're closing prices where the options are expiring and people are jockeying to get in and out of those options positions, which they probably had for a while. So if you run your double normal volume scan, you just have to be very aware that option expiration day, those numbers are going to be a little bit off. But reading this in a little bit of a bigger picture and diving into some of the charts, we actually noticed. So again, you can get the list. You know what? I'm actually going to give you this list. I'll pop this in here for you right now, and you could read that. So that list right there is a place to start. So what I want you to do is take that list, and after the market closes today, save that list. You're going to actually end up having that list, run it every day at like 5 o'clock at night, whatever it happens to be. And what you're looking for is increased activity by institutions. You're going to be looking for activity where there has been more than normal volume. Now, what are you looking for? You're looking for a breakout of a consolidation. You're looking for a first time out of a pause, because you know we make money on the push and the pause. You're looking for the first breakout coming out of that pause. Make that one of the top scans that you run every single night, because it's important to understand which stocks have smart money activity. Okay. Now we're going to actually run some scans to look for relative strength in some stocks heading into this entire week. Okay. There's a couple of stocks as well that have had heavy volume all of last week. Now that's a clue. The market was getting bashed. We had bad news, stuff pushing down, right? Hang on a second. I really apologize. Somebody's got nothing better to do than to be spamming the chat right now. It's a shame, actually. I'm not sure who's doing this, but I really feel bad for you. It means you don't have a life. I don't know any other way to say that. So anyway, let's head on over to the charts and let's take a look at some ideas, breaking this down a little bit further. So one of the things that we want to do is we want to actually have criteria. So we all know that the minimum criteria that I have is my template. And my template is here again. So we're not looking at double volume here at this particular point. What we're actually looking at the amount of stocks that meet that criteria from a bullish perspective. So if we go into the research from last week, we know that the week was horrible from the lows, from the highs to the lows as the entire week actually unfolded, right? But we saw some pockets of opportunity over here on Friday. We're going to take a look at communication services. We're going to take a look at some tech stocks, and we're going to take a look at consumer cyclical. So I just want to be clear about this. When you're mapping out your game plan for the entire week, it's very important that you're doing relative strength and relative weakness to stocks throughout the week. Oh, actually, I want to give you this before I forget. I'm gonna put this up on the screen right now. You can screenshot it because this is actually the topics that we discussed on last night's coaching call. So I just want to bring this in for you. We every Monday and Thursday, like I said, we have implementation sessions. And this is what we talked about last night. So I'm going to make this a little bit bigger for you, just so you can take a screenshot of this and pull it up. Now, some of the conversations you can actually see here last night are very important. So number one here is, how do you get better entries when the market is reversing? So let's talk about that right now, because the market is technically reversing from a down move to an up move right now. So one of the ways to be on top of the market while it's going from downtrend to uptrend is you need to have a list of stocks that are already showing relative strength while the market is weak. So that's step number one. And we're actually going to do that in FinViz right now. We're going to actually do that together. So if we go back on over to FinViz, we know that on FinViz there's maps, but we're going to start out over here with simple moving averages. So we have the criteria. We're going to go over to above the 50 period moving average. Now that brings up 29 stocks. That's okay. I also want to know if anything meets the stricter criteria of also above the 50. And now that's the 20. So we have two short-term moving averages right there, the 50 and the 20. Now this list of stocks right here are stocks that are going to be looking to be a buyer on today and this week. Next, we'll go, actually, you know what? I'm going to actually pop this into this here as well. So you'll have that list as a short-term list of stocks to be looking at for the week. Next, we're actually going to go over to the maps. So the maps normally defaults to 1 day. Now we know that the market was weak all of the entire week last week. So we want to say, were there any stocks that were strong for the week while the market was getting pounded? So again, we're answering the question now is, how do I get better entries before the market reverses or if the market reverses? And it really comes down to, you need to have that list first. So if we're talking about building a list of the best stocks to buy now, I want to know what other list, that list I just gave you is 19 stocks. What other list in the S&P 500 or the Dow showed strength while the market had one of its worst weeks in a while? So now we're going to take a look at that scan. Okay. So you can see it defaults to 1 day. We're actually going to go out to the 1 week performance. So you can see some stocks such as Oracle actually up, Boeing, which is one of those stocks we just talked about, and FedEx. Now, you might be saying to yourself, well, that's not really a monster list. Well, you only need 1 or 2 good stocks to make a really good living, as long as they're doing what you expect them to do. So if we head back on over to the charts, we looked at Oracle, Boeing, and FedEx. Now, remember, FedEx has earnings this week, but if we take a look at Oracle, okay, this is where the week started, right? But this is really the big one. Oracle had good earnings last week. So let's put this into context. There's short-term catalysts and long-term catalysts. Earnings for Oracle last week were amazing. It still has longer-term bearish order flow, right? We're still pushing to the downside here, but this giant gap with monster volume on earnings is what I'm looking to see come back into play this week. So I'm looking for the buyers from last week's earnings in Oracle to come in. Now let's take a look at Boeing. Boeing, if you take a look at the chart, we actually were up 4 out of 5 days last week. 1, 2, 3, 4 days while the market was getting pounded. Now, something else from last night's coaching call, and I want to bring this out to you because this is a big deal and it's something to actually really learn. Okay, so I'm going to pull this back up onto the screen as well, which is here. Average true move. Average true move is what you can reasonably expect to earn on a stock when it moves in the direction of your swing trade. That's different from average true range, which is the high to low over 1 day. Average true move is how you determine how far or close are you to the optimal entry. Now, what's interesting about Boeing, it met the criteria for stocks to be a buyer of coming into this week because it was strong, had green candles 4 days in a row last week. But this is the important thing. Boeing at this moment has rallied last week up to its average true move. So Boeing has already done what it normally does. It's fantastic that it meets the criteria, but I wouldn't be looking to initiate a new swing trade. Maybe I'll day trade it today with the rest of the market, but I need to now see it pause before my next move. So I just want to walk you through right there, here. So right now we've actually rallied up to where it sold off pretty hard last night. You can see it actually last week. It actually hit resistance and kind of just stopped right there. So what I'm looking for in Boeing today, which obviously showed the relative strength that we're looking at over here, I'm looking for one more day of buying. And again, I'm mapping out the entire week. I'm looking for one more day of buying in Boeing for it to be a day trade. Then I'm looking for a couple of days of a pause, and then I'm looking to trade it again. And the normal move in Boeing, just to give you an example, is between $22 and $25. So we're looking for one more day up. We're looking for it to pause a couple of days at this resistance level, and then I'm looking for the next $25 move. Now, you might be saying, wow, we're mapping out the entire week. Yes, that's what professional traders do. We look into we read the tape, we read the order flow, and then we say, what is most likely to happen next? If it happens, great. Let's go grab the money and let's get paid. If what we plan to have happen does not unfold, that's okay too, because that's a part of trading. So remember, the very definition of having an edge means it works most of the time, which also means sometimes even great ideas don't follow through. So if you learn nothing else from me, which I hope we're getting a lot of information to set up this week, you can still place amazing trades that you thought were perfect that might not make money. That's a part of trading, and a thing that a lot of people really need to make as a part of their core, that you can do everything right and still not make money, but that does not make it a bad trade. But if it doesn't follow through, you have to get out and then go look for the next idea. That one thing is where a lot of traders mess up, because they put it on, they say, no, it's supposed to go up, and then they hold the trade for much bigger losses because it's not following through. When you understand that trading is about risk management and learning to hold your winners, it becomes so much less stressful, because now you're just running a trading business the same as any other business. You're going to have some expenses, which are trading losses. And now the longer you learn to run that business, that's when you learn to improve your profits. So that's Boeing. Okay. That's the next 4 days in Boeing. FedEx, which actually has been a little bit stronger as well. And you can see that here. Let me actually fix that chart. You can see that big move up here. And now we actually have, if we go into the earnings for the current week, you can see that FedEx a little bit later in the week, right here on Thursday, after the market closes on the 23rd. So you got to be aware that it's coming out. So what does that mean? It's now rallying hard into the earnings that are coming out during the week. So what assumption can we make that the stock is actually rallying hard into the earnings? There's a bid underneath that stock right now. So I'm looking to be a buyer of FedEx between now and earnings, which is after the market closes on Thursday. But I am not looking to carry it overnight because it's already rallied a pretty good distance over the last week or so. So those are the bulk of the ideas that I'm looking at to set up to be buying opportunities for this week. I want to make it clear. I have a lot of confidence in being a buyer this week. I have conviction in being a buyer this week. I plan to buy stocks this week, and I plan to hold them if they are following through. So I am going to have trades on the bullish side of the market and the bearish side of the market. If the market, the sector rotation, and the market internals that we look at validate my argument based on the fact that what we talked about at the beginning of today's call, most of the bad earnings are done. The inflation number, the CPI, that news has already come out and been played out the last 2 weeks in the market. And the Fed already ripped the Band-Aid off, and that news came out already. So all of that news short term is priced in. So I am looking to be a buyer this week if we get follow through. And I told you at the beginning of the call that what I'm looking for is I'm looking for a green candle in the Dow, the S&P 500, and the QQQ this week. If we stack that order flow together and those candles remain green, this could be a really nice week of buying in the stock market. If that happens, and I'm going to give you this right now, if that happens, this is the list of stocks that I'm looking to be a buyer of this week. Okay, these are the stocks that I'm looking to be a buyer of. If that happens and we don't follow through, I will also have a list of stocks that meet the bearish criteria for this week because they have the greatest likelihood of going down if the first scenario does not follow through. Now, if I could just ask you for a favor. Number one, if I'm providing some value for you today, do me a favor, subscribe and hit that like button. But more importantly, type yes in the comment if I'm helping you understand what it means to be a professional trader by telling you some good ideas are going to work out, some good ideas are not going to work out. As long as you know what you plan to do next and you understand what it needs to look like if it changes, promise me you'll take the right action. Because when you take action, as opposed to being frozen and saying that's not supposed to happen, that's when you turn small losses into really big losses and you lose your confidence. Confidence in trading comes from trusting yourself to do what you're supposed to do. So this is the types of conversations that I want to have with you here as often as possible. And if you want to come into our community, you can learn about Discord and our different memberships. But let's just say we're going to have the conversation here, and I'm trying to get you in the right mindset for the week that's coming up. I just put on video what I plan to do this week and how I plan to do it. I'm going to challenge you now for this week and say, have the guts to say, what do you think is going to happen this week? And then make a plan for it. And if that plan works out, fantastic. Go make some money and be proud of yourself that you had the guts to put that out there. Go make a plan and say, if this happens and it follows through, great. If you make a plan, you put the trades on, and some of those trades don't follow through, be smart, pay that business expense, and then go to the next idea. That is what you're looking for. You are looking for confidence that comes from you because you trust yourself to take the right action. Confidence does not come from the market. And I'm going to tell you this, and we're going to wrap it up because this is important. Look at what happened to the market at the end of 2021, where everybody thought they were a genius, and the market started to reverse back to the downside. People with risk management got out, maybe scaled back, maybe even looked to sell short. Traders who did not map out a plan that says, you know what? What if this reverses? What do I plan to do? If you didn't map that out, you're probably a little angry right now because we're still going down, and now you kind of froze. So from this moment forward, promise yourself, each month, each week, and each day. It doesn't matter what happens. What matters is that you take the right action based on managing risk and learning how to make more on your winners. What matters is that you take control of the outcome. And I'm going to leave you with that. Thank you so much for joining me here today, everybody. I will speak to you soon. Have an awesome, awesome week. Have a great day.